Hi traders, this is Blake Morrow. You are listening to the Morning Edge webinar. Hope you guys are having a great trading session and a great Friday. Oops, why did I just do that? So let's get started with our analysis this morning. Like I said, if I sound a little tired, I am. I'm actually pretty pooped today. I'm pretty happy. Let's see here. Where did just looking for my bias chart. Okay, let's get started. Let's go over to the Euro US dollar. And like I said a little earlier, I'm a little hesitant about playing the euro at this point. Let me get rid of this first. Let's get rid of this. Okay. I believe that 108.20 is going to offer great support. First of all, this is 127% extension of the last move up on the hourlies. 127% extension comes in at 108.30. You couple that with the support from back here, back in May. Okay, remember this is through the Greek saga, referendum, all that crap. All this support comes in right here at 108.20. I mean, think about how much support is down here between 108.20 and 108.30. Do you really want to get short the euro dollar at 1.0820 on a Friday afternoon, even if the data is blowout? Like, let's say inflation comes in 0.1% higher, both on core and on the core reading and just regular CPI. Okay, let's imagine the housing data is blowout. Let's imagine confidence is high. We get to 108.20, and do you really want to be short the euro dollar right there at that support level, right in front of a weekend on a Friday afternoon? I know for me, it doesn't interest me. I'm not interested in it. But at the same time, do I want to be long the euro? That doesn't interest me at all either. So, but where does the euro start to squeeze? I mean, me personally, I believe the euro starts to squeeze right here. Okay, so if we can see that spike low, see this spike low, see that? Okay, see how we couldn't hold our wick above there? So we get above 109.10, we're going to start squeezing. Now I know we're only 20 pips away. And if you're an intraday trader, maybe you get some momentum there. But we're in a range. We're about ready to turn back to bearish in the euro dollar, especially if we get below 108.20. Okay, but we are still ultimately in a big range. We're just getting towards the lower end of our range. Okay. Again, I'm not interested in going long the euro, but I'm a little skeptical about being short down here. All right. Let's go into the pound. So the pound, I mean, I have to admit, the cable, it's been holding above 156 and 155.50 really well. 155.50 we know is pretty key support. We were mentioning it, all week. Let's go over to the hourly chart. Remember this? Bam, bam, bam. Well, guess what? That's all real critical. Now, if I was long the pound, what I would be most concerned with right now is that daily candle, if it turns red. Now, think about where we're at here, and let's just do that so it doesn't really screw us up too much. If we can, well, my computer just went on the fritz. What's up with that? I just hit a bug. Okay, never mind. There we go. Okay. So, Having the hardest time with these lines. Okay. Seriously? Hold on. Okay. So you can see here, as long as we stay below 156.50, is it, well, is it one? I guess it's a little bit more than that. 156 high, 74 overnight high, 72. So let's just mark us up there. Let me delete that. Let's delete that. Let's delete that. Okay. So 156.75, and then support comes in at 155.50. And think of how that will alter the candle, what you see here today. Obviously if it's green, like let's imagine that candle's green. I'm drawing it out for you. Like by the end of the day, that could be pretty bullish. Is that green or blue? That was blue. Let me go to green. I don't know why. Here, green. Okay, there. Imagine if that's green. That would be pretty bullish. Weak U.S. data. This thing turns back to green. Boom. That's bullish, right? The flip side to that is, let's imagine the line turns, or the candle turns red. Okay. If it turns red, and we close on our lows, so it looks something like this. Okay. And we got this long wick right there. We're going down like that. See, what's really unique about me and everybody else, so it seems? I have no idea what the data is going to be like today. Everybody else seems like they got a good handle on the inflation and everything else and what it's going to be, but I really don't know what it's going to be. All I know as a trader, I can prepare for either situation, but I'm not a fortune teller, so I don't know what we're going to have. I just prepare for either. So, with that being said, 157.75, 155.50. I think the pound has the opportunity to turn really bullish or really bearish if we get an exaggerated move up or into support or resistance. So 155.50, 156.75. Both of them are pretty key today. We are in a range, but we can really set up for like next week's move, in the cable. And I'm interested to see what the cable is going to do here, because I really have no bias in the cable right now. Like I'm not convinced either way what I should be doing. I'm looking at the cable and I'm like, I don't know. Should I be short? Should I be long? And I really have no bias at this moment. But I'm interested to see which way it's going to go. I think, like I mentioned in yesterday's blog on the pound New Zealand, I mentioned yesterday, I think the comments this week from the Bank of England has got a lot of traders very bullish the cable, but I also think it's kind of premature. I've heard these comments from the Bank of England before. It's not the first time. That's what took the pound from here to here. Okay? Or those types of comments. Now that we're past Greece, we're getting those types of comments before, but I still think that the Bank of England is going to be behind the Fed. So whatever the Fed does, the Bank of England's going to do. That's kind of how they've operated since the financial crisis. Okay, they've just kind of followed the Fed's lead. I feel that that's going to be the same type of situation moving forward. I don't think the Bank of England's going to hike before the FOMC. So I guess what I'm trying to point out here is I think the market has got a little bulled up the cable, but I don't know if it was warranted. Okay. All right. At least maybe it's a little premature. I think if they're going to hike, they're going to hike maybe in the beginning of 2016. We're probably going to end up hiking in September. And we'll have a several month jump on the Bank of England. Anyway, that's why I'm a little skeptical about where we're at. So but I'll be interested to see which way it goes. Okay, because I don't mind playing it either way. It's just I kind of gotta let the market figure out where it's going to go versus me trying to tell the market where it's going to go. All right, so here's the Swissy. There is the Swissy. Now, the Swissy confirmed a breakout. This is a currency pair that I would be interested in buying a dip. I'd probably be interested in buying the low of the day. So the low of the day today is at 50, right? 54, 55. The low today is at 95.55. I'm interested. If we have weak data today, I'm interested in buying the Swissy on any dip. Any dip to 95.40, I'm interested. Okay, so let me put that down. Support, 95.40. Kind of hoping it gets down there. That's a key level support. That is the major breakout point. If you look at the daily chart, major breakout point there, 95.40. We dip down there. I think the dip will be very short-lived. I'm looking to add. Now, the problem is if we break 96 cents, now you just snapped a 50% retracement, and that is probably going to start building more momentum. And if that breaks, I'm going to buy more. Okay. I think we're in a range, but we're now turning bullish. We're in a bigger range, but I think we're turning bullish in this range. Okay. And like I said, if we break 96 cents, I'm probably going to have to add to my dollar Swiss. I should be adding right now, but I want to get past this data first. Okay. Fantastic. Let's go look at the yen. Let me grab a sip of my coffee too. Okay. Like I mentioned to you guys yesterday, as long as we stay below 124.40, I don't mind being on the short side of the dollar yen. And I have to say, and I'm going to point this out. The dollar yen has not been going up with risk appetite. So if you look at, and I'll just do it again. If you add the E-mini futures here, okay, and you look at the just straight up move that we've had in the E-mini futures, you'll notice, and this is a 4-hour chart, so look at like the last, I think probably what's most important here. Look at the last, I don't know, 24, actually we can go into the last 48 hours. Notice the difference. Okay. Do you see how the equity markets just continue to just grind up? See how the dollar yen's kind of stopped? I like it. I'm short the dollar yen. I like it. It's the same reason why I was short yesterday, and the same reason why I'm looking at it right now saying, hey, it's fine. Farther the stock market goes up, less the dollar yen goes up with it, the more bullish or more bearish this dollar yen becomes. But obviously we got to get past the data, because if it's, if we have strong U.S. data points, then the dollar yen is going to bounce again towards the 20s or maybe even higher. But I like it. I like the fact that that stocks have been going up and the dollar yen has not. Soon as the stock market rolls over, this dollar yen's in trouble, in my opinion. Okay, so as long as we stay below 124.40, I don't mind being on the short side. 124.40. We are in a big fat range and have been for a while. Well, we've tried to break higher, but anyway, we're in a big range. Support 123.70. All right, let's go over to the Canadian. I think now here's we got the Canadian. Obviously, well, the stupid thing won't come down. Maybe it will today. We got Canadian CPI. If now you could get a double whammy here in both directions or in either direction. Let's put it that way. If we get weak US CPI, strong Canadian CPI, the dollar Canadian can come down aggressively, right? Weak US data, strong Canadian data, you could see the air come out of this really quick. Fine. Let it drop to 128.30. That's support. That's key support. But we can have a double whammy going the other direction, right? That's a warning for anybody who's short the dollar Canadian. The more likely data today is strong US CPI and Canadian CPI that comes in a little weaker. What will that do? Well, that could push the dollar Canadian above 130, and then where? That's when you have to start looking at the hot spike high here back in 2009, 130.64. You look at all these other highs, you got 130, 130.14. I mean, anywhere from 130 to 130.60 gets really, really, really dicey. But let's just say the U.S. data comes in strong. Let's just say the Fed's right. Fed's turning pretty hawkish. Inflation starts to tick up a little bit. We come in 1/10 higher than expected, both on core and headline CPI. Canadian CPI comes in a little weak. Is that enough to push us above 130 to possibly 130.60? Because above 130.60, I'm going to have to add to the dollar Canadian, and especially if we close above 130.60 by the end of the day today, I'm adding to my dollar Canadian, probably fairly aggressively, meaning I might actually double up my position on a breakout, even on a Friday. Because I want you guys to think about this. This is a weekly chart. You guys saw the cup and handle we're talking about, the potential here. Okay. This is a weekly chart. A lot of institutions, whether you guys know this or not, you know it now. A lot of institutional traders, they try to mute out a lot of the technical noise. Do you know when they do? Because they buy and they sell based on, macro data, and they try to make their decisions based on longer term charts. So this way they're not getting whipped in and out of the market. They're not using, they're not using a 4-hour, in a 7-period moving average. And a lot of institutions, they do their analysis at the end of the week or the beginning of the week, and they look at those weekly closes. If we get a weekly close above 130.60, you're going to get a lot of people buying they're going to be buying the hell out of the dollar Canadian next week. Okay, that's on a double whammy. I don't necessarily believe that's going to happen today. I'm hoping it does. I mean, why not? I'm long the dollar Canadian, but man, I'll tell you, close above 130.60 would be huge. So you got 130, 130.60, and the dollar Canadian is bullish, but we're heading into obviously some very, very critical resistance levels. Let's take a look at the Kiwi. So the Kiwi dollar, I'm getting really, really skeptical about shorting the Kiwi down here. Okay, you guys know why. I mean, I'll go into the weekly chart. It was in my blog yesterday. We're coming really close to the monthly 618 of the last, 7 years. You go the last 15 years, we're at a 50% retracement. I do think that the 63, 64 cent level, and I know I've been saying it for a while, I think it's going to provide pretty good support. Now, I am not, and so let me be very clear here. I am not in the camp that the Kiwi dollar is bottoming and this is it. I'm not in the camp of I want to buy the Kiwi and sock it away for the next couple of years. I personally do not believe that. I actually think the Kiwi is going lower. I actually think it's going below 60 cents. I just don't. I think that we're in areas where it could bounce, is what I'm trying to say. And I think that the Kiwi dollar is in areas that can bounce pretty aggressively. Well, I mean, what do I mean by aggressively? A couple hundred pips? Yeah. 161% extension of the last move up is supporting. Okay. Obviously, we're getting supported now at 65 cents. So any dip down to 65 cents is going to be very well supported. We are in a bearish trend, but I think we are bearish, but we're doing a counter trend move. I think any move back up to 66.15 is probably going to be a decent short, even if you're scalping. Like if we make it up there, I might actually turn around and short the Kiwi, just even if it's only for a 20 pip gain. Okay, so even if we bounce up here, I wouldn't mind shorting it, just for a few pips. But the Kiwi does look like it's turning. At least, end of the week, Kiwi's been beat the hell up. Probably some profit taking on shorts. It makes sense. Makes sense. All right, when I come back, we'll do the Aussie, we'll do the dollar index. We got to take a look at some of these other ones like the peso, the Swedish krona, which is very close to breaking out, the Norwegian krona. Don't go anywhere. I'll see you guys back here in a few minutes. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. All right, so really quick, I think, if I'm not mistaken, the Kiwi was just hitting new highs on the day. The euro's bounced from its lows, but I mean, all in all, there ain't squat going on. Oh, just to let you all know, I still have a short order for the euro pound at 70 pence, excuse me. So just so you all know, it's still sitting out there. I haven't touched that. Okay, let's go into the Aussie. All right, let's go over to the Aussie dollar. So the Aussie, a lot like the Kiwi, we're stabilizing here. I have to congratulate Paul Franco. Yesterday, he's like, "Hey man, this Aussie looks like it's going to turn around." It did. I mean, the Aussie turned really, really decisively yesterday. Well, I won't say decisively, but I mean, it found a support and it hasn't been down there since. So good on you, Paul. If you're listening in, it was a good call. Now, here's the thing. Nothing's changed in the Aussie though between yesterday and today. What you'll notice here on this 4-hour chart is that resistance that we pointed out yesterday, it's stuck, and it will continue to be good resistance. That comes in at 74.35. Okay, so 0.7435 is resistance. Oops, resistance. Support. Now you got to imagine people that are caught short down here. Like, let's imagine you shorted the Q or shorted the Aussie. You're like, it's breaking down. It's breaking down. We're hitting multi-year lows. Here we go. And then it bounced up on you. Now you'd be happy with a break even, right? You'd be happy if you got happy if you got a break even on your trade now. If you're short, I'm not. I mean, I'm short the Aussie yen. But I'm not short the Aussie dollar. But I mean, me personally, I'd be like, yes, thank you, God, thanks for letting me out. Okay, so that comes in at 73.50, 73.50. Okay, we're in a bearish trend. Oops, not bullish. We're in a bearish trend, but like the Kiwi dollar, the Aussie dollar looks bounceable. Okay, we're in a bearish trend, but it could bounce for sure. Well, not for sure, but I mean, it looks capable. That I can say with confidence. It looks pretty capable of bouncing. I'm not saying it's going to. I'm just saying it looks possible. And you'll notice in a lot of these cross rates too. The Canadian, the Kiwi, or excuse me, the Aussie and the Kiwi, they're firming. The Canadian is the exception to the rule right now because, well, frankly, crude oil looks like crap. And crude oil looks like it's going to take out 50. Okay, let's go over to the dollar index. Let's take a look at the dollar. There's the DAX. It's not really doing a whole lot. Here's the dollar index. So we are at major resistance now. And, I'm going to reiterate what I said earlier about the euro. I really don't think the euro is going to break 108.20. Not on a Friday. Even if we have just blowout data, across the board, I think that the breakout might even be limited. So, let's imagine this daily chart in the dollar index. Even if we rally a little bit, see how we're going to face right into resistance right here? Do you see that? I mean, resistance comes right into play above that resistance. So, trendline resistance comes into play right above the horizontal resistance. So, even if we break out, that could sucker some people in on a Friday afternoon. So, I'm not as confident that the dollar is going to break out on a Friday in this environment. That doesn't mean the dollar is not going to eventually break out. I'm just saying today it's I'm a little nervous about it. So resistance comes in at 97.80. See what the high is here. 97.77. Yeah, so let's just call it 97.80. And even if we break above that, then, as we approach, hold on, let me do something real fast. So even if we break through 97.80, I mean, any move up to 98.75 is going to offer more resistance. 98.75. That will be key resistance. We are still in a range. Okay. Now support. This is a daily chart, so I'm not going to even deal with that right now. So 97.20 still offers pretty good support on dips. So let's say the data is weak. 97.20 should offer some support for today. All right, we do have to take a look at a couple others. Let's go over to the peso. Now you notice the peso is right back up towards its highs, right? Not just looking at the peso, I don't know if it's, you can obviously, if you want to, if you guys are trading the peso, you can obviously, if you think the data is not going to be strong today, you can short the peso and just put stops above 1588. Okay, if you want to. I'm not suggesting that's really a good trade. 23 minutes from a U.S. data dump, but again, if you want to, it's possible. Or I think the risk reward is there. Let's just say that. I mean, your risk is right here, your reward is down here. So you're risking one to make two. So it's not a bad risk reward being on the short side up here. I don't know if I'd really want to sell the dollar ahead of today's data either. Here's the Norwegian krona. The Norwegian krona is kind of consolidating recent gains, but the Norwegian krona might actually give you some opportunities here. So there's 820 and 810. If we break 820, man, we're on our way to testing, if not breaking through the highs. So, and I am going to put on the Swedish krona, so don't go anywhere. Support 8.100 and resistance 8.2000. And we are we're in a range, but we're grinding higher. Actually, I'll just put us back in a range, but man, I don't know. I don't know if I'd want to short that. Okay, let's go to the US dollar Swedish krona. So here's the Swedish krona, and as you guys know, we have this nice little cup and handle pattern, right? Well, that thing looks like it's ready to just, doesn't it? 840, 860. We're in a range, but again, let's just imagine all the data is good today. Strong data, dollar rips higher. That could be a strong, strong move. And I can't trade it, but I know a lot of you can. Okay, so there is your bias chart. Let me see if I can take some questions now. Going all the way back.